How would you like to be able to have a stress-free tax season and be able to save a lot more money this year? Well, guess what? In this video, I'm going to be breaking down the exact steps that you need to take as it relates to being able to do that and really being able to maximize your tax savings. So let's get into it. So step number one, organization is key. So one of the best things that you can do as it relates to making sure that you're prepared for your tax season is making sure that you are organized, okay? By having all your documents in place, you're gonna be in a much better position to be able to win as it relates to the tax game, okay? And it's gonna be a little bit different for you depending on your situation. So I'm gonna break down these different scenarios and really help you understand exactly what you need to know as it relates to making sure that you're prepared for the tax season. All right, so let's go ahead and talk about our W-2s. Okay, so if you're just working a 9 to 5, if you just have a W-2, one of the things that you want to make sure that you're doing is you're collecting all of your W-2 forms. So you should have received that from your employer. If not, you want to make sure you go ahead and get that collected and make sure you reach out to them ASAP, okay? Because that's going to be required in order to go ahead and get your taxes filed on time, but then also correctly. Also, another thing that you want to make sure that you're doing if you're working a 9 to 5 and a W-2 is you want to make sure that you're getting your retirement forms. You're going to get, there's different 1099s as it relates to working for your 9 to 5. So 1099R is going to be really important for you to make sure that you get. That is going to have the information as it relates to your retirement account. That should also be able to get sent from your financial institution. So wherever you have some type of retirement, especially if you've been contributing to your retirement account, such as like a traditional 401k, that's going to be important for you to have because that is going to be a tax deduction for you. And it's literally going to help you save a bunch of money if you have that in place. A couple of other documents that you want to make sure that you have in place in order to be able to maximize your tax saving is understanding this, okay? So as it relates to saving money on taxes and being prepared for the upcoming tax season, you want to make sure you identify if there's an opportunity for you to take advantage of what's called the itemized deductions, okay? And basically what that means is it's going to be a deduction that is going to be able to reduce your taxable income, i.e. it's going to help you be able to pay less money in taxes, okay? So as it relates to deductions, you have two main deductions. For anyone that is going ahead and getting their taxes done, you have what's called a standard deduction, and you also have what's called an itemized deduction. The standard deduction, depending on the tax year, is going to be that tax amount and an automatic deduction that you take literally off the bat, okay? And it's gonna be different depending on your filing status, okay? So if you are single, it's gonna be less than if you're married filing jointly. One of the reasons why that is because if you're married filing jointly, that's two people, and basically they just double the number, okay? So let's say for instance, depending on the tax year, but for let's say for instance, that number is 12,000, okay? So for a single person, that number is gonna be 12,000, but if you're married filing jointly, that is going to be 24,000. And that could make a really big impact and really help you save money on taxes. But another opportunity, an even bigger opportunity for you is going to be itemized deductions. And itemized deductions is going to be something that's going to literally help you save a bunch of money if you qualify for it. And as it relates to itemized deductions, I use an acronym called MITCH to help you remember exactly what those itemized deductions are. So the first part of that MITCH as it relates to itemized deductions is going to be M. So M is going to stand for medical expenses. So if you have any out-of-pocket medical expenses during the year, that's going to be an opportunity for you to be able to go ahead and collect. You want to make sure that's organized and have that all lined up and identify what's going to be the total amount of those medical expenses. And if all those expenses exceed the standard deduction for the year, then it's going to be an opportunity for you to save more money in taxes. I is going to stand for interest paid. So if you have interest paid during the year, let's say you have a mortgage, you own a home, you have interest paid on that mortgage, that's going to be an opportunity for you to be able to save more money in taxes. T is going to be taxes paid during the year. So if you pay taxes on your home, property taxes for instance, that's going to be an opportunity for you to be able to save money on taxes. The next one is going to be C. C stands for charitable contributions. So if you're donating and contributing to a 501c3 or a qualified charitable organization, that's going to be an opportunity for you to be able to save more money in taxes. And H, casualty and losses. So if you happen to experience any casualty or losses during the year, you want to make sure you go ahead and organize and collect that documentation to be able to help you save more money on taxes, okay? And again, it has to be able to be bigger than the standard deduction amount that you automatically get just by going ahead and filing your taxes. So go ahead and get those documents organized. And if you do that, make sure you go ahead and give it to your tax preparer or whoever you're working with as it relates to taxes. Now, if you're a business owner, you're gonna have more opportunities to be able to save money on tax, but then also some more documents that you need to have. So in addition to some of those other documents that I mentioned, you're also gonna want to look at and see as it relates to your business, what can you specifically get, okay? So let's say you're a freelancer and you're working during the year. Let's say you're working with a whole bunch of different clients. Let's say you go ahead and do videos for instance, as a freelancer, you want to make sure that you're collecting your 1099s and all the 1099s that you received during the year. That's going to be important for you to be able to go ahead and collect and record. But then more importantly, you want to make sure that you have your financial statements, okay? And your financial statements is basically the main one that you need to be aware of is going to be your income statement. And if you're an S corporation or a C corporation, you also want to make sure you have your balance sheet in place, because that's also going to be used to go ahead and record the financial statements as it relates to going ahead and get your taxes done on the tax return. So let's say, again, going back to this freelancer, if you are doing photography, you want to make sure you're collecting your 1099s, but then with the financial statements, it's going to list out all the different expenses, okay? We're going to talk more about expenses and which ones is going to help you be able to maximize your tax savings, but you want to make sure that your financial statements are in place and are in order, okay? So you want to make sure you're doing that as quickly as possible. Again, they have different softwares that you can go ahead and use. You got QuickBooks, which is probably going to be one of the most popular and most easiest ones to be able to access, and there's a whole bunch of people who have experience working with QuickBooks, so that you can go ahead and utilize that as an opportunity to be able to have your financial statements in order, right? All right, now in addition to being self-employed, you want to collect some more important documentations. You're also going to want to start collecting your receipts. Now granted, you don't necessarily need your receipts to get your taxes filed, but you at least want to get those organized somewhere just in the event that you get audited, okay? So if you do get audited, God forbid, then you want to make sure you have receipts in place to go ahead and prove out the expenses that you had during the year. And as it relates to receipts, I'm talking about receipts for office supplies, I'm talking about receipts for travel expenses, I'm talking about receipts for all the deductible tax expenses that I'm going to talk about later on in this video. You also want to make sure you have your bank statements as well. Again, it's not required, but again, it's going to be something good that for you to have organized somewhere that you have as it relates to tax season, to make sure you're not missing anything and taking advantage of all deductions that's available to you. If you're going ahead and using a vehicle for business purposes, you want to make sure you're tracking the mileage. You want to have some kind of mileage tracking log to be able to record all the miles that you're using for business purposes, okay? So let's say, for instance, that you are a business owner and you are driving to go to a conference or a seminar, okay? That's going to be an opportunity for you to be able to go ahead and deduct for your mileage. I'm going to talk more about being able to save more money as it relates to vehicle expenses, but just making sure that you're recording the miles during the year is going to be really key. There's a whole bunch of apps that you can use. Again, if you're using QuickBooks is going to be a good opportunity for you to be able to use that mileage app. And actually what it does is, as soon as you start driving, it's going to ask you whether it's for business or personal, and it's going to be able to record those miles for you. All right, so tip number 2, how to maximize your deductions and savings, okay? So this is one of my favorite sections here. This is one of my favorite topics as relates to being able to prepare, but not only prepare, but also make sure that you are preparing to be able to create more wealth for yourself and your family, okay? So one of the best things that you can do to be able to maximize your savings is making sure that you are, again, taking advantage of all the different tax strategies that are out there. So as it relates to tax strategies, or as it relates to taxes in general, there's really 2 different periods as it relates to taxes, okay? You have what's called tax preparation season, and then you have what's called tax planning season, okay? So if you're watching this video, you're in tax preparation season. There's only so many things that you can do in order to save money on tax, but I'm going to share with you a couple of opportunities there for you, especially if you're a business owner. But then most importantly, you want to make sure that you're just aware of tax planning, okay? So if you're not aware of tax planning is that activity in the process of actively and proactively saving money on taxes, okay? And it's actually planning out during the year. And if you do that during the year, and then when it comes to tax season, that's going to be your opportunity to be able to save the most money that you can, okay? But let's say you're already in tax season, it's all good. I'm going to give you a couple of strategies that you can go ahead and utilize, okay? So one of the strategies is going to be that SEP IRA, okay? So if you are a business owner, if you are self-employed, there's what's called the SEP IRA. They actually allow you to be able to contribute to that after the tax year is over. That's going to be an opportunity for you to be able to save money on taxes. If you don't have a business, depending on the tax year, sometimes there are some opportunities for you to be able to take advantage of different strategies, such as other retirement contributions that you can make after the year's over to be able to save more money on taxes, okay? But you just want to make sure that you're aware of the laws during the year. But typically, the most you can save on taxes is after tax season's over and you're actually planning out during the year, right? But a couple things I want you to keep in mind, especially if you're a business owner, is some of these tax strategies, some things that you're not even aware of, okay? So a lot of times what a whole bunch of business owners end up doing is they end up overpaying in taxes, okay? When I say overpaying, I mean paying more taxes than what they need to, okay? So if you're a business owner and you have a room within your house that is specifically used for business purposes, you're now able to take advantage of the home office deduction, okay? And basically what the home office deduction what it allows you to do is you're able to take a square footage of that specific place within your home for tax purposes. So let's say you have a home that is over 2,000 square feet, okay? Let's say 2,000 square feet, just keep the math simple, okay? So you have 2,000 square feet in your total home. You have a space within your home that is 200 square feet, and that's what you're gonna use for your office. Now, that is 10% of your home. What you're able to do and what the IRS tax code allows you to do is now you're able to go ahead and deduct 10% of different expenses that you're already spending money on as it relates to being a homeowner. Okay, so you got your mortgage interest, you got utilities, you got rent if you are renting. Okay, so all these different things are going to be an opportunity for you to be able to deduct for tax purposes and also save more money on taxes during the tax season. Now, I know I talked a lot about vehicles before, but a lot of business owners are missing out on the deductions that you can take as it relates to vehicles. And as it relates to vehicles, there's different ways you could do it. You have what's called the actual method, and you also have what's called the standard method, okay? And the actual method and the standard method is going to impact how much money you're able to save on taxes, okay? So regardless of the method that you use, again, I wanna make sure that you are going ahead and tracking your miles. Your miles are going to be an opportunity for you to go ahead and to be able to record how much of your miles are going to be related to your business, okay? Because that's what's going to be deductible for you for your business. So let's say, for instance, you're using the mileage method, okay? It's called the standard mileage method, and depending on the tax year, it could be about 60 cents, it could be up, it could be down, depending on the year. The IRS always comes out with a different rate depending on what is going on in the economy, all right? So let's say you go ahead and commute 5,000 miles, and you have 60 cents, that's gonna be $3,000 that you're able to deduct on your taxes, which is going to reduce your taxable income, help you save money on taxes, okay? So you wanna make sure that you don't miss that, because that's one that's really overlooked. But more importantly, you have what's called the actual method, okay? Now this one's gonna be a little bit more time consuming, a little bit more tedious, but the tax benefits are going to outweigh the extra work that's gonna be required, okay? So as it relates to the actual method, if you're using a vehicle for business purposes, now you're able to go ahead and take advantage of the actual expenses as it relates to the vehicle, okay? When I say actual expenses, I mean being able to take advantage of what's called depreciation. Depreciation is like literally the tax like cheat code, okay? So with that, you want to see and do that analysis, okay? And that can give you a huge tax savings. And then also on top of that, with the actual method, you're able to now go ahead and deduct for gas, you're able to deduct for maintenance, repairs, all these different expenses that you couldn't do with the mileage method. One of the reasons why the mileage method works that way is because it's a blended rate, okay? So they include depreciation, they include, and you allow the IRS to go ahead and make the estimate for you. You wanna make sure you're doing an analysis between both to see what's gonna be the best for your situation. Another opportunity that's gonna help you save a lot of money on taxes as a business owner is business meals, okay? So as you're having your meals, a lot of times you may be having a meal with a business colleague or someone that you're doing business with. You may just think that's a regular expense, but believe it or not, it's going to be a tax deduction for you, okay? So if you ever had a meal during the year and you're discussing business opportunities and it's related to business, now that meal is going to be deductible for you, and you want to make sure that you're able to write that off in your taxes, okay? So basically a couple of requirements that you need in order to make this happen is you want to, again, you do it for business purposes, you want to document the attendees, you want to document what you discuss, you want to document the cost, you want to document the tips associated with it, the taxes, all that stuff is going to be deductible for you. But again, documentation is going to be key. And when you're going ahead and getting your taxes done, you don't necessarily need to give that specific receipt to your tax preparer, but you do want to make sure that you have it recorded somewhere. Again, there's tools and softwares where you can actually take a picture of it. QuickBooks also allows you to do that as well if you have the QuickBooks app, so that's going to be a really easy way to make sure you're tracking that for your business. As a business owner, but even as a W-2 worker, is going to be your retirement account, okay? So making sure that you're maximizing your retirement account is going to be a huge opportunity for you. As a business owner, you can have what's called a solo 401k. That's basically like a traditional 401k, except it's going to be for your business. You also have what's called a SEP IRA, which allows you to actually be able to deduct, depending on the tax year. You're actually able to deduct up to $58,000 during the tax year, or 25% of whatever you pay yourself, whichever one is lower. One more opportunity for you to be able to save some more money in taxes and making sure that you're recording this is education and training, okay? So if you invested in a conference, if you invested in a seminar and you have a business, okay, you wanna make sure you're able to deduct that. That is a business expense that is deductible for you. And one of the reasons why that is when you spend money in order to be in the pursuit of profit, you are now able to take that as a business tax deduction, okay? Again, there's gonna be some opportunities for you to include as it relates to tax, so make sure you're including those in your tax preparation process. The next thing that you want to make sure that you're doing is you're using the right method. So there's different methods as it relates to making sure that you're filing your taxes. So you just want to do an analysis and figure out what's going to be the best method for you to file. Now, depending on your situation, you may get away with just using a tax software and doing it on your own, such as using a tax software such as TurboTax. But at the end of the day, one of the things that I do recommend is working with a professional to make sure everything is done correctly and you're not having any issues down the line, okay? This is actually a non-negotiable, especially in my opinion, if you are a business owner, okay? So if you're a freelancer, there's a lot of complexities as it relates to being able to get your taxes done, and you want to make sure you're doing that correctly. And a lot of business owners, they try to do it on their own, trying to save money, but ultimately it ends up costing them a lot more money in the long run because they are not doing it correctly and they're not taking advantage of every single opportunity as it relates to helping them save money in taxes, because they're just not aware, right? You don't know what you don't know, and that's why I always recommend working with a tax professional. If you feel like your situation is simple, when I say simple, let's just say you're a W-2 and let's say you're making less than 100,000, then going ahead and using a tax software is going to be okay for you, and for the most part you're not going to have really any issues. All right, so number 4, one of the things that you want to make sure that you're doing is you're actually reviewing the return, okay? When I say reviewing the return, you just want to kind of go through it and see exactly what's on there, okay? And I'm not expecting you to know everything that's on the return, but you just want to look at the major items, okay? You want to look at if your name is spelled correctly, the basic information, your address. You want to make sure if the income looks about right. You want to make sure that you're looking and seeing if you are a business owner, that the business return is actually included in there. And do not be afraid to ask questions, okay? So if you're working with a tax professional, they should be able to explain to you every single thing on that tax return. If not, then you probably need to work with someone else, but you want to make sure that they go ahead and give you a walkthrough of it, okay? So one of the things I recommend doing is when you're going ahead and going through that review, you're going ahead and getting reviewed by that tax professional. They should let you know, basically highlight the major areas. Again, not necessarily every single line item, but overall let you know some of the biggest points that you need to be aware of. And if you felt like you should have qualified for itemized deductions, one of the things that you want to make sure that you're doing is you actually ask that tax professional, did they go ahead and see if you're able to qualify for the itemized deductions? If so, then you want to make sure that's on the tax return. If not, they need to actually show you the calculation that they went through in order to do that, okay? Also, really important, making sure that you're filing the right status as well. So whether you're single, married filing jointly, married filing separately, head of household, these are all going to impact how you're going to be taxed. And just understand, okay, a single error, whether it's a typo in your name, your address, your social security number, can literally delay the whole process, okay? So if you are in a position where you can qualify for a refund, that's going to delay your refund. If you are in a position to where you end up owing money in taxes, okay, that could actually result in fines and penalties. So you just want to make sure that everything is on point and make sure it's good to go before you actually go ahead and have them send it off to be filed with the IRS. And last but not least, most importantly, you want to make sure that you're filing on time, okay? So we have different deadlines as it relates to taxes. Generally speaking, April 15th is the tax filing date, depending on the year and depending on what it falls on. If it's a government holiday or whatever the case is, okay, it's going to impact and it's going to be moved depending on the year that you're watching this video. But generally speaking, April 15th is the date for basically W-2 employees, people who do not have a business. If you are a partnership, if you are a S corporation, then you want to make sure that you file that by March 15th, okay? So you do have to file it a little bit earlier, so that's something to be aware of as well. Also, you do have the opportunity to file what's called an extension. Extension is going to allow you to give you 6 additional months to go ahead and get your taxes filed. You still have to pay the taxes due by April 15th or March 15th, depending on your situation, but you do and can file your taxes after those 6 months are up. And just understand this, one of the reasons you want to make sure that you're filing on time is that you could pay some hefty fines and penalties, okay? There are literally fines and penalties that literally charge you interest every single day, every single month that you are not making sure that you're filing on time. So you want to make sure you're doing that on time and making sure that you're on point with that. One thing I want to point out is making sure that you're also compliant with the Corporate Transparency Act and the BOI reporting, okay? I have a video over here that talks all about it, but you want to make sure that you're on point with that. There's a whole bunch of new rules and regulations as it relates to that. And if you don't have that file on time, you could really pay up to $500 per day if you're late, and up to $10,000 per your business entity. Just understanding this too, by filing early, you can get your refund earlier if you are in a position to get a refund. And if you happen to be in a position where you end up owing money in taxes, just know that you can go ahead and create payment plans with the IRS. There's a whole bunch of different plans that you can go ahead and create, but just understand that you know, it is an opportunity for you to be able to stretch out the payments and being able to making sure that you finally catch up on time. But the worst thing that you could do is not file at all and be completely behind on it. But as I mentioned, one of the most important things that you want to make sure that you're doing is what's called tax planning, and tax planning is going to help you proactively save money on taxes and making sure that your business is saving and maximizing as much as you can on taxes. All right, so again, hopefully these tips were helpful. If you enjoyed that, you're going to love this next video over here. Be sure to subscribe, like. I'll see you next time. Bye.